All right, I'm going to go ahead and get started. Welcome, everyone. My name is Ben Fredericks. I want to welcome you to our webinar today. I'm really excited to have you here, and I'm going to show you real quickly. This isn't going to take much time. We'll have you out of here in about 25 minutes or so. But I want to show you how exactly you can participate in e-commerce and generate great passive returns without having all your risk in one store. So here we go. So essentially what we're going to cover today is our e-commerce cash flow system. I'm going to show you exactly how we're taking e-commerce shopping that's already happening all over the country and turning it into passive income. And I think, honestly, this is the biggest opportunity going in, not only to this coming year, but the years to follow. E-commerce is not going anywhere anytime soon. And I'm going to show you exactly how you can see monthly returns, not annual, but monthly returns of 7% all the way up to an infinite return. I'll show you exactly what that means here in a little bit. So my goal for this presentation is to help the following types of people, that are investors. I'm looking for investors that want a done-for-you business. A lot of people are busy, especially entrepreneurs, investors. They've got a lot on their plate, and if they want to look at a cash flow opportunity, most times what I hear is it's got to be passive because I'm too busy. I'm doing 100 other things during the day. I don't have time to do this for myself. And they want that monthly cash flow. So that can come in the form of, different investments, but cash flow is king. And then also, this is for investors that have capital and available credit. I'm sorry, but if you don't have two nickels to rub together, this isn't going to be for you. You will need capital to invest. That's why we call them investors. And you're also going to have some available credit. And I'm going to show you exactly why. And then this is really for investors that are looking to diversify income streams. I'm primarily a real estate investor. So I was looking for different opportunities that produce cash flow. So who am I? First and foremost, my name is Ben Fredericks. That's my beautiful wife, Kelly, and my beautiful daughter, Stella. You can connect with me on Instagram at Benjamin Fredericks. If you do, I'll follow you back. I'm an entrepreneur. I have businesses in multiple areas, but I'm primarily focused in real estate. I bought and sold over 400 properties in the last 4 years. I also am a partner in Noteworthy Publishing, where we do note investing, note education, and networking at events all over the country. And then I'm a part of this, eComvestors. We started out with our own Amazon store, and we've grown it and built a platform where we're helping investors increase passive cash flow with these stores. This is my partner, Aaron. He wasn't able to join us today, but I love him. He's a good dude. You can see what he's about. We're partners in this as well as Noteworthy, and he's one of my best good friends. So stick around. If you have some questions, I'm going to do a FAQ spot here at the end, but obviously you can throw some questions in the chat box and I will answer those at the end. I'm also going to have some great bonuses as well, some free giveaways, so it'll be worth your while to stick around. So anyway, I'm going to give you, if you've seen some of our webinars before, you might have an idea, so this might be, just rehashing something you already know, but I want to give a quick breakdown for those of you that are brand new to us and you don't understand quite how e-commerce works in the fashion in which we do it. So let's say, for instance, you're a customer and you go to my store and you see some pots and pans that you want to buy for your house. My store has them listed for $150. You're on Amazon, you click the Buy It Now button. Next thing you know, we get the order. We buy those pots and pans from our supplier for $100 and have them shipped directly to you. We keep the spread minus any platform fee. So assuming there was no platform, we would obviously make $50 here in this scenario. All right, so this is where the credit is necessary. Because when you purchase something from our store, it depends on the platform, but it can take up to 2 weeks for us to get paid. All right, so we need that available credit to go out and purchase those products from the supplier to have shipped to you. I want to share with you, before I get too deep into this, exactly where I went wrong in this business and to help you avoid the same mistake. So when the pandemic first started, I knew e-commerce was going to be a huge opportunity. And I, took a course, from this Facebook group that I was a part of. And I was like, okay, this might help me, get into this e-commerce space and start to understand it a little bit. And essentially, in a nutshell, what it was is they were taking products from China, AliExpress, Alibaba, and having them shipped to the US. So you would list products on a website that you created through Shopify, create ads on Facebook, run those ads, test them, scale them up, build lookalike audiences, all this amazing stuff that I don't know how to do at all. And theoretically, you're supposed to sell a lot of products. Well, that didn't happen. One thing I didn't account for was incredibly slow shipping times from China, right? So when the pandemic hit, it was very hard to get products into the country. So we were looking at 6 to 8 weeks just to get products. Facebook, in turn, suspended my ad account as well, and I could no longer sell. I didn't have, the knowledge to do PPC or different kinds of ads. So Facebook suspended my ad account, and it was suspended for the better part of a year without any explanation as to why or to how to get it back. So I was out of business almost as quickly as I was in it. Then I discovered how to automate my e-commerce business. And this is where it got really interesting for me, because now I was able to see how I could get somebody else to do this for me that was well educated. They knew exactly how to do it. They knew all of the nuances that the e-commerce platforms had. So what is automated e-commerce? Well, let me just compare it with a traditional business model. If you own a store, you need a space or a warehouse, you need employees and management. You have to pay for utilities, insurance, inventory that you have to reconcile. You have to have marketing dollars and money for receivables. With an automated store, I don't need any of that. All right. So this completely breaks the mold of traditional business. So our team runs the whole show, and we share in the profits of the store. This is all the stuff that our team does. All right. They find the best products that are selling. All right. Let me give you an example of this. So when my first store started to take off, one of the things that I was selling a lot of was battery backup systems for garage door openers. Now, I don't know what this had to do with anything. I would never have thought that that'd be a product that sells a lot. But if it might have been to do with the very cold winter in Texas and people couldn't get out, open their garage door, I don't know. But the team figured this out. They check the algorithms. They know what's selling. They see the price point. They see the margins. They're researching this stuff every single day for my store. All right. I don't have time to do this. This isn't something that's in my, wheelhouse of expertise. They handle all the orders. They handle questions from the customers. They handle all the shipping, handle all the returns, and they handle all my tax filings. I don't have to do much of anything, which is very appealing to me. All right, I'll be honest. I'm looking to free up more time and spend less time doing work and have more free time to do the things that I want to do, like travel, play golf, spend time with my family, not necessarily in that order. All right, so these are the things that are important to me. So I want to have these assets that produce enough cash flow for me to be able to do that. And e-commerce is one of those assets. So what do? Well, I supply the fuel for the enterprise, right? The capital and the credit. That's the same thing that you would be doing with the business, all right? Credit gives the fuel to this business, all right? You have to have it. I pay off my credit card every 2 weeks. So ultimately, I spend about 15 minutes a month just, quote unquote, working, all right? But I like to look at the business. I look at my store every single day to look at the metrics and the KPIs, the key performance indicators, and see what's going on with the store. I like to see the communication from the team. And I might have, my 2 cents to chip in there every once in a while. That's just me being a business owner. I like to, if I have an idea, I want to share it with my team and see if there's a way for us to, implement it. But ultimately, the store is there producing, whether I'm awake or I'm asleep, whether I'm traveling, whether I'm out on the golf course or doing whatever. So sales are ringing in out of the store all the time. So how much can you make with this business? I mean, it's really subjective. It depends on the amount of credit that you have. That's ultimately what's going to be a deciding factor. But I want to share this particular store. This is a store that we started back in early March. And this store began to start to scale up in May after we passed our 120-day probationary period. And as you can see, we've gone over, just crossed over $104,000 year to date on the right-hand side. We've done on the left just about 16,000 in sales this week, about 33,000 in sales in the last 30 days. All right, so this store is beginning to scale up. And one of the lessons that I learned, especially from Amazon, was not to grow too fast. So I am being very pragmatic and, controlled with this store. I'm making sure that I don't go from 30,000 one month to 150,000 the next, because Amazon looks at that with great suspicion. They want to make sure that you're doing the right things the right way for their customers. And I get it. I understand. All right. So I'm doing this very controlled. I'm not going to see more than a 10 to 15% growth month over month, probably for the first year. All right. Which is, doesn't satisfy the green-eyed monster in me that wants to make a lot of money with this. But I've been through suspensions and I understand the process a little bit better now. So I'm going to take it very slow, and I think that's going to serve me well. So here you can see the back end of what a payments dashboard looks like on Amazon. This was taken today. Today is September 15th, but there's almost $20,000 in balance that I have here. And then you can see funds that are available now is about 600. I can request to take this out, which I will do. But Amazon releases funds to me every 2 weeks from 2 weeks prior when a product was purchased. They give that 2-week period because they want to make sure that the buyer received the product and that there's no issues with the product. All right. So after those 2 weeks, they can release those funds to me, and this $19,476 will be released to me probably incrementally. But I could wait a full 2 weeks and then just have it all done at once. But I like to take it out when it's available and then just pay my credit card off so I can get those rewards. Again, how much money you can make. So this is from, as you can see down here on the bottom, this is from August 2021. This is last month. We made a 13% profit on this store. So our cost of goods were $19,971. Our net profit was $2,500. Hence about 12.5 to 13% profit. All right. So the cost of goods is what you need the credit for. All right. That's the magic number. I need to have that credit available to be able to purchase those goods. All right. And we did, a decent amount, but at some point this cost of goods could get up to, $100,000 a month. So I have to make sure that I've got the credit there. Right. And I look forward to that day, because if I'm generating 13% on a $100,000 credit spend, I'm feeling pretty good. This is a 6-figure business off of one store. All right. So I talked in the beginning about an infinite return. Well, what does that mean? Well, once I've paid back what my store costs, the investment, I'm using the bank's money every single 2 weeks for free. I'm never paying interest on that because I'm paying them back. So my return is actually infinite. All right. Every single month. What other investments can you do where that happens? It is rare. It happens in real estate if you buy a property at the right price, but it's kind of a special deal. This is my Walmart store. This Walmart store started in early July. Again, I've seen a lot of people get suspensions because they grow way too fast. I'm being ultra cautious here. It would be easy for me to show you big numbers on this and say, look how much money you can make. This is legit. This is real. I'm showing you real numbers here. Okay. This is the difference between me, my team, and the other gurus that you're going to run across. This is a real store. This is my store. It's only done $6,300 in sales since July 1st, but come mid-October, this store will be ready to start scaling up. And guess what? It's just in time for the holiday season. So I'm very excited for this store, but again, I'm taking very controlled measures to make sure everything is taken care of and that the store is working properly. This is Walmart's payout system. As you can see, they pay out every 2 weeks. There's no drips from Walmart. It's just specifically every 2 weeks. It either falls into that category or you got to wait for the next 2-week period. So let's compare this to other investments, because if you're here, you might be a real estate investor. You might not be. You might, run another business, but I'm a real estate guy. So I'm going to share exactly how this compares with my real estate. So let's take a look at notes. So I bought these 6 properties for $57,000. Now, how I did that is a whole other webinar. I'm not going to get into that today. But these produce, when they're performing, these notes produce about $1,800 a month in cash flow, which is about a 42% return on my investment. That does not include the money that I've made on paper. So in other words, I bought these for $57,000 and we did initial loans for, probably close to about $110,000, $120,000, somewhere in that mark. So more than, almost double what we paid for the property. We're creating net worth with these notes. I love notes. That's why I bought a note company. It's a big part of my investment strategy, a big part of my life. All right. But let's look at an Amazon store just as an example. If an Amazon store cash flows $5,000 a month, which I'm getting close to on that Amazon store, which I just showed you, and it has an ROI of 7 to 10% just every month, which I made 13% last month, then it would take me another 10 notes and another $95,000 in liquid money to buy the properties to match that cash flow. All right. Now, that's not it. That's not all. It's beyond money. Besides the $95,000, I'm going to need those properties are going to have to sell for more than 2 times what I paid for them. The numbers are going to have to make sense on the monthly payment. I'm going to have to find and qualify a buyer. I'm going to have to make sure that they pay me. I'm going to have to onboard with the servicing company. There's a lot of things that I have to do. There's a lot of work involved. It's not truly passive. I mean, I have a team, but I'm still involved and still have to do some work on this to make it happen. I've got to find the deals. I've got to fund the deals. And then I have to, manage the deals. Let's take a look at rentals. I have 6 rentals in Iowa, where I'm originally from. We purchased those for about $264,000. With down payment and closing costs, I had to put down about $57,000. And those net me about $18,000 per year in cash flow. All right, which is a 31% ROI. Nothing to sneeze at. It's fantastic. I love rentals. But let's look at the Amazon store again. Let's compare it. See how it looks. It would take me another 14 rentals and another $132,000 for down payment money to buy those rentals versus one Amazon store to produce the same exact cash flow, guys. That's powerful. Now I get it. If you're in real estate, you're saying, well, yeah, but you could refinance those properties, pull that money out. Yeah, you're right. But what if it's a down market? What if I've lost equity? What if I've already done that and I still want to accumulate more, right? Either way, I'm going to have to jump through those hoops, all right? So obviously, real estate comes with great tax advantages. I can, get deductions and, 1031 exchange and all that great stuff. I can't do that with an Amazon store. I understand that. I just want to show you how cash flow compares. So what this webinar is really about is diversification. One of the things that I learned early on with a store suspension on Amazon is that I have to diversify. There's no way I can keep all eggs in one basket. If I have just one store and it gets shut down for a period of time, I'm no longer cash flowing. That's no bueno. So I need to have my cash flow continue. So what I did was I started diversifying across platforms. I'm going to show you exactly how we do that. I mean, we do it with real estate. I have notes in different markets. I have rentals in different markets, right? I do that to protect myself. I do it with the stock market. I don't put all my eggs into Apple stock or into Google stock. I put eggs into plenty of different baskets. Apple, Google, Microsoft, all these different things, so that if one is not performing well or has a bad quarter, I'm not getting eaten up on my investment. So now let's talk diversification in e-commerce. So again, I've got some pie in Amazon. I've got some pie in Walmart. There's 3 other pies that we can bring to the table for you. Now, I'm really excited about this. Facebook Marketplace, Etsy, and of course, eBay. All right. We can run an e-commerce automation platform for you on all 5 of these platforms and give you ultimate diversification in the e-commerce space. So let's look at these. Facebook Marketplace. Obviously, we know Facebook, one of the biggest companies in the world, has over 1 billion users just on Marketplace. All right. They offer this across multiple Facebook companies, including Instagram and WhatsApp. And Mark Zuckerberg talked about this earlier this summer, that they are going to make a big play for e-commerce. And why not? They have the power. They have the users. They want to, continue to boost up that stock price and the net worth of everybody that owns some Facebook. So why not charge a platform fee for every sale that happens in their marketplace? They're going to do it, right? They're already doing it for sellers. But pretty soon, I wouldn't be surprised if it's that way across the entire platform. Also, Etsy. If you're not familiar with Etsy and you're married, your wife probably is. They did 1.7 billion in sales just last year. They have 86 million active users. And eBay. eBay, of course, the OG of e-commerce. When garage sales went online. All right, they did 27.5 billion in sales just in the first quarter of 2021. They have 187 million users, and 35% of all cell phones in our country have the eBay mobile app. All right, it's there for them to use. eBay is a monster and still a great opportunity to be in and own a store. So let me address some frequently asked questions. I see that we got some here in the chat box. And this was one of them. Why don't you just have a bunch of stores on your own? Well, I do. All right. So I have multiple Amazon stores. I have multiple Walmart stores. My eBay store is getting ready to launch. My Facebook store will be ready to launch in less than 30 days. So I have multiple stores, but there are some nuances to that, very specific rules. So I have stores with partners. All right. And that's how I set this up on different levels. And, if you are thinking about doing an e-commerce store and maybe you don't have the capital up front, but you've got the credit, or vice versa, you don't have the credit, but you've got the capital, you could partner with somebody, right? So there's no reason that you cannot do that. But there's a limit. There's a limit to how many that we can do. So what we wanted to do was create the platform, and then we will profit share with you as the store owner for managing the entirety of the back end. A true joint venture. If you don't make money, our team does not make money. Isn't this getting saturated? Well, not really. I mean, look how many users go to these websites every single month. Amazon gets 2.5 billion visits every single month. How many times do you buy something from Amazon every month in your house? I mean, hopefully your house doesn't look like this picture, but you get the idea, right? I mean, I have at least a couple Amazon boxes outside of my house every single week. So with all these different platforms, there's a huge amount of opportunity. And plus, here's the thing, guys. Not everybody can do this. Not everybody has the ability to create the business. Not everybody has the ability to fund it with credit, right? So this is really a play for a very, very small percentage of people. How soon do you start making money? Well, that really kind of depends on the platform. Obviously, Amazon has a probationary period. Walmart has a bit of a probationary period that you have to go through. eBay, Facebook, Etsy, those you can really get up and running probably in less than 30 days. What are the risks? Like any business, there is always going to be risk, all right? You can get suspended from Amazon or Walmart or eBay or Facebook or Etsy. Suspensions are a reality and they can happen. Why do they happen? Well, it can be any number of variables. It could be the metrics on your store. It could be because there's a dissatisfied customer, right? So let's say, for instance, you order a chandelier and the UPS driver that's delivering your chandelier is having a bad day and he just chucks the box at your door, breaking the glass on the chandelier. You're going to be pissed. So whose fault is that? You don't know from Adam that it's the UPS driver. Instead, you blame the store, you ship me a defective product. And so Amazon can put the brakes on your store and say, hey, you need to resolve this before we allow you to sell. I understand that. I'm glad they do it as a consumer and, of Amazon. I want to make sure the stuff I'm buying is quality. It's not fake. It's delivered and, I get the right thing that I ordered and it's in great condition. So that's part of the process, right? So those are variables that you cannot control. Now you might say, well, aren't you controlling the back end of the store? Yes. So our team will, control the store to the best of their ability and do all of that work. But there are things that cannot be controlled in any business that can happen. So there's always a risk. So if this is your last dollar, this ain't for you. Okay. Who owns the business? You do. All right. You will form an LLC that will own the business and it will be yours to do with as you please. You'll have an agreement with us for a period of time. At the end of that agreement, you say, you guys are doing a great job. I'm going to keep it going. Or B, you're going to say, hey, I know somebody else doing this. I'm going to run it over there. Or C, you're going to say, well, I'd like to maybe do this myself. I'm going to run the store. Not sure why anybody would do that. But if you decide you wanted to, you could. All right. If you want to sell the store, you can. It's your store. All right. Again, if it's producing cash flow and you want to sell it, I don't understand why you'd want to do that. But if you do, make us your first call. We will look to buy that store. All right. Can you use multiple credit cards? Absolutely. I sure did on my first store. I started out with a $25,000 Amex. And then, I supplemented with my Discover card, which had a higher balance as well. So I was able to scale a little bit faster if I wanted to. Going back to this, I would, if you have less than 25,000 in available credit, I wouldn't do this. Okay. How do you view the activity of your store? You will have complete access to the back end of your store. You can check on it at any given time. Most of them have mobile apps, so you can see exactly what's going on. There is a renewal fee, but that's dependent upon the store. And there is also financing available. The financing, you got to have at least a 640 FICO score and a 40,000 a year in income, and the terms vary by borrower. I've seen it be anywhere from 6 to 14%. It really just depends. But that this is a viable e-commerce solution if somebody is financing a store. It's non-secured, it's not something that they can tie to like real estate. So the key questions here are, do you think this would work for you? And do you have available credit to make it work for you? If you don't have available credit, then it's not going to work for you. All right. That's a key component. You have to have it. We can coach you on how to get the best cards, rewards, travel points, or cash back and all that good stuff. But look, just to be fair, if you have bad credit, you don't have money to make an investment, again, it's not going to be for you at this time. It doesn't mean it won't be in the future. You can work towards it, but today is not the day. So the biggest question is, what does this cost and how do I get started? Well, it varies by store, but let's break these down. So on Amazon, to build out your store and set it up, we charge $35,000. Financing is available and the revenue share is 65-35 in your favor. 65% of the net profits go to you every month. 35% go to our team for running your store, doing all that work while you get to sit back and collect the majority. All right. It's a 120-day probationary period with Amazon. Now, here's a caveat. I do have, on an ongoing basis, established Amazon stores available. These are stores that already produce cash flow, that have already gone past this probationary period, sometimes a year, sometimes 3 years. These are more expensive stores, but they're already producing. So that might be something that you'd want to entertain as well. For a Walmart store, it's a little bit more expensive. It's a $45,000 charge. Revenue share is 50-50 on these because, well, Walmart running those stores is a lot more intricate than Amazon. There's a Shopify aspect to it and, a lot of different moving pieces. So it's a little bit more pricey, but Walmart, their probationary period is much shorter than Amazon's and they allow you to scale very quickly. All right. Again, I would caution against that. That's not my cup of tea, but ultimately it's your store. If you decide to do that, you can. For eBay, Facebook Marketplace, and Etsy, the store build-out cost is $15,000. Again, financing is available, and the revenue share on these is 50-50. Now, if you have a larger credit line, we can negotiate a higher split for you, all right? More production means more for our team, also means more for you. So I call these sort of like your step-in stores, but don't sleep on eBay and Facebook and Etsy. They produce, all right? And they produce well. These are cash flow that you can start with pretty much right away on a cheaper scale, but they are going to produce. You can also buy a package of stores. So if you truly want to diversify and say, hey, I'd like to buy an Amazon store and a Walmart store and an eBay store, we'll get you an eBay store for free, all right? Revenue share according to the store, like we shared before, and an eBay store can be up and running for the holiday season for you to take advantage of cash flow now. And then by, early spring, your Amazon and Walmart store should be firing on all cylinders. As an added bonus today only, we'll give you a free ticket to our upcoming Noteworthy Inner Circle event. That's a 2-day mastermind that we're hosting in Orlando, September 24th and 25th. That's a $1,500 ticket, just if you decide you want to do a store today. And as an additional bonus, I'll throw in a growth and engagement campaign to your Instagram account. If this is important to you, you might not have an Instagram account, but it's a $3,500 value. So if you want to give it away to somebody that it might be important to, you can certainly do that, all right? So if you want to automate your cash flow, diversify across multiple platforms, schedule a discovery call with me. I'll be glad to answer any of your questions. You can go to ecomvestors.com/call. Thank you so much for checking us out today. I appreciate it. And we look forward to the opportunity of working with you.